Assalamualaikum everyone. Today is day 4 of the sneak peek into my signature course, Peaceful Profit Through Investing. I hope you guys have been enjoying the series. So today is a relatively important day because every time you are going to invest, you are going to hear somebody or the other tell you that women make um, women do not make good investors. And I want to tell you from my own experience that women make better investors than men. I'm going to have a full class on that on Sunday. But I want you to take confidence in the fact that not only am I a woman, majority of people I teach are women like yourselves. Why is this extremely important to talk about? Because women are risk averse, and the problem, the obstacle, the hindrance of women um, not succeeding in investing or finance is mostly them not having the self belief that it requires to invest or day trade. Honestly, there's nothing more than that. It is just confidence, and it's like a ingested belief about yourself that you are, you know you're not that good with money. It could be anything. So when we are doing this 12-week course, you are going to see a psychological shift in yourself, which is extremely important. This is the key thing that differentiates good, um, successful investors from people who quit or say that day trading does not work. I have been day trading for over 10 years, and I can tell you, I had no mentor when I started. In fact, because I'm a doctor, I went to med school, I was discouraged actively. That includes my husband. The only one person that saw the kind of potential in me was my father-in-law. So hats off to them, to him in particular. He saw something in me that only I thought I knew. But quite honestly, my background in medicine did not was not the factor that helped me. I always saw women in my family making financial decisions. Um, I had a very so we had a culture where my mother's opinion was highly sought after when anybody in the family was making investments, because she was seen as the voice of reason. She had a lot of contacts in investing in general, and also she was a zoology major, so she was not a finance major. But just she had an eye for investment, or she had a knack for investment. So I saw people, everybody from the family, respecting her opinion, taking her to real estate meetings, asking her opinion when they were investing their money in businesses. That included not only my own father, but her brother-in-laws, her mother, her sisters, um, my father's brothers, like my uncles. And so, seeing this environment in which a woman's opinion is so highly respected is the reason why I always knew that I'm going to be fine. I was never, of course, it infuriated me that my husband would tell me that, you're going to lose all your money, and you shouldn't get into this. I had male colleagues, physicians, who used to tell me, you should stay in your lane. Even more so, there were more women who were critiquing me to stay in my lane than there were men. Just to let you know, my first client was a male. He was a male physician, who was the first one who paid me to consult me on something that I was honestly doing for free. I wanted people to invest, so I used to talk a lot about it. So, keeping this in mind is extremely important, and the reason why I have a 12-week course and I do not like to pre-record it and have you do DIY is because a lot of people don't understand the support that a beginner investor needs, especially controlling your emotions. And one of the things that is laughable, honestly, is that when people say that women are more emotional and so they can never be a good investor, because to be a good investor you need a steady hand. I can tell you from my experience that women are actually very, very shrewd investors. Men mistake empathy for being emotional. I find women to be extremely resilient. They are more they are built with more resilience. That's why we can give birth. This is our fitra. This is from Allah subhanahu wa ta'ala. If we do not have this resilience, we would never be able to bear children. Men are easily spooked. That's something I can tell you. If there's like an emotional trauma, men are easy to be spooked. They easily break down under pressure. Mothers and women generally are pretty resistant to they're pretty perseverant, if that makes sense. So this is a quality that makes them a great, great investor. Why do I have this pep talk before I talk about the three things that you need to keep in mind to keep your emotions in check when you're day trading or you're investing or you're doing anything? Is because when you go through this course, I've seen one of my clients had two of her children take this course with me over the past 2 years. And one of them was in the pandemic, and the one of the teens was, I think, not even 15 when he took it with me. Is that this course is also going to change your mindset, which is extremely important. It's not just about me holding your hand and going through every stage to have you to build your confidence in your self-esteem. The other factor is that this is a life lesson that you're going to learn. Trading, working in with numbers, working with finance is it's not my major, but I'm telling you, it taught me major life lessons that are universally applicable. So let's go on to the stock market and talk about the three things that you might have heard, but these are the three things that if you keep in mind, you are not going to ever sell in a panic, or you're not going to buy greedily. So we are not going to follow the trend. This is why I repeat myself, we don't follow XYZ, Miral, Sarah, Zara, whoever. We follow the numbers, and we follow these three rules. So the number one rule is that there is something known as market corrections. What does that mean? Every time a stock price goes up on a company, for example, by 10%, um, or 20%, that stock price is also going to come down. Why does it come down? Because day traders like myself sell that stock for a profit. When a number of people are selling a stock, the price of the stock is going to come down, obviously, because the stock price rises as the number of people invest in a company more and more. That's what determines a stock's price. And so the more movement there is in a stock, the more you might think it's a risk, but that those are the stocks that make money. Stocks like Google, which rarely move a few cents up and down, except for some circumstances, rarely make money. But a lot of people, because of their temperament, prefer those stocks because they don't like the fluctuations. I personally recommend that you need a stock that at least moves a dollar up and down, because we are here to make money on a daily basis. We're not long term investing. So we need a stock that moves up and down. Now, the problem is that when the stock moves up, right? We like it because it makes us money, but we dislike it when the stock moves down. And I um, teach you in this 12-week course that when the stock moves down, it is an opportune time for you to understand that this is a market correction. This is completely normal. A stock price is going to move down, but then it rebounds, which is called a bull market. A bull market is when a market goes a price, or the market in general rises to more than 20%. And then there's a crash, which is called a bear market, which simply means that the overall the stock market is down by 20%. So a correction is a stock moving between 10 to 20%. Bear market is when a stock, generally the stock market is down 20%, and a bull market is when the stock market is over 20%. Now, why does this matter? Why do these three things matter? These three things matter because people buy and sell without having any clear indication of how the market works. And this doesn't work in their favor. So when the market dips a little bit, they're scared and they sell, and they're at a loss, and they're emotionally selling. They're selling in a panic because they don't have a trading plan, which we spoke about, I think, a day ago or 2 days ago. That when you do not have a trading plan, when you don't have your when you don't know when to put a stop loss, when you're just following XYZ, when you're just following, oh, somebody did, so I'm going to do that too, this is when you are going to lose money. When we work together for the 11, 12 weeks, we are going to have a plan. And at the last week of before the course closes in February, inshallah, I am going to review all of your trading plans with you. Why? Even though that you have been doing all these plans, I want you guys to have a plan for Q2, which is the second quarter of the year. So you're not just going to leave me with Q1, you will have a plan for Q2. And that is, I think, what separates my course from other people, because not only am I concerned about how you're trading right now, how you're learning how to trade, but I'm also concerned as to, I want to see how do you apply or implement what I've taught you to take your trading journey further into Q2. And also, if you plan to stay with me through Q2 and you're in the membership, which is paid, by the way, and it is free for you in the course. But if you choose to take the membership, which is paid, you're continuously going to share your trading plan with me, and we're going to be exchanging notes on a weekly basis. So I personally feel that the market goes through all these three things: corrections, a bear market, and a bull market. And understanding this should then give you the confidence of not selling or buying. You're not going to go up and down with the tide. You're going to follow your trading plan, and you're going to exit and enter inside the stock market according to your risk, according to your profit margin, according to your, what makes sense to you with regards to taxes. So these are the three things that I wanted to talk about: corrections, bear market, bull market. And when we are going to go through the course, inshallah, starting on December, in December 2023, you are going to see, we are going to study the market. This is why I have a live every single week, so that not only am I, delivering to you theoretical information, but we are also practically looking at, okay, what is the market, which phase is the market in right now. I hope that's making sense for people who are watching live or people who are in a replay. So it's important for me to go through those ups and downs, so by the time it's February, you already have a sense of, okay, this is what the market does normally, so I need to relax, I need to calm down, I need to follow my trading plan no matter what the market is doing. If you're able to do that, you're going to be fine. And also, um, like I said, please remember that women are intuitively better traders. I will discuss this in more detail. I have research to back it. I have Forbes articles to back it. I also have something like, I already spoke about this, the obstacle, but I'm going to talk about this in detail on Sunday. If you are a part of my Sunday free investing class, please come and be a part of that class. It will be revealing to you. You will see a side of yourself that you would never thought, that most people don't bring into it. So I want to end this with one thing and one thing only: if you know the cycles of the market, you are going to be a better trader, because you're relying on information and facts and numbers instead of your emotions. You are not trading, at the spur of the moment, in the heat of the moment. No, we know that the market is going through an up or down or a correction or a bear or a bull, and that is how we stick to our plan, we stick to our guns. And you are going to see, inshallah, that if you stick to your plan, the market rebounds, so you are going to be fine. But if you are continuously and you're going to continue to haphazardly invest and throw money here and there, unfortunately that is not the way to grow money. You have to be very strategic, because we are not Jeff Bezos. We do not have billions of dollars to throw. So let's begin to strategically invest. Today's Black Friday. I am obviously boycotting the Black Friday, not only because of the Palestinian issue, which is extremely important to me, but also because um, briefly speak about, on and off, I speak about the mental toll of clutter. There is established research that a lot of clutter, no organization, causes your brain, causes stress hormones in your body, and it, kind of freezes you. You're not able to perform at your best, level. So instead of spending your money where you will never see it back, I invite you to join me in this course. Learn a life, you know learn a life skill, learn a skill which is able to make you money, instead of just spending money and making all these big corporations rich, and allowing all this corruption to happen in the world. So guys, check yourself, check your intentions. Are you building a life where you're going to be leaving a legacy, or are you building a life where you're going to leave debt, um, a lot of material clutter, and honestly nothing for the future generations? So I will see you inshallah on Sunday. I hope this was helpful. Assalamu alaikum.